After 7 years of trading, I built a simple 1-minute scalping strategy with high reward to risk, high win rate, and no indicators. Let's start. Now, the goal of this video is to teach you a strategy that you can use every single day and even as a beginner. So you're a beginner trader or advanced trader, you can use this setup. Now, using this one, you'll be catching high reward to risk trades. So we're not doing the typical 1-to-1 or the negative reward to risk. I always focus on high reward to risk. You'll be taking one trade a day at least, and you can actually take much more. But even one trade a day can make you done for the day and within an hour or less. And it is a repeatable and simple trading plan that you can actually, perform every day. It works on all pairs. So you're either trading Forex, crypto, futures, or any market, you can still use the strategy. It works any time of the day. So if you're trading on Asia, London, or New York, you can use this any time of the day. Now, just as a note, no one ever will teach you this. And why? Because I built it myself from scratch. So this is coming from my 7 years of experience, and no one probably will teach you this. Now, one truth about scalping that a lot of people actually misunderstand is that scalping is not about catching small moves. Scalping is about using a lower time frame in order to take trades and then be done within 10 minutes, 15 minutes, or maybe 1 hour. So it's not about small moves. That's sometimes part of it, but it's not the main focus. Using this strategy, you can actually catch massive moves on the 1-minute chart. So you're not going to be catching few pips, you can actually catch huge moves. And it's not about 1-to-1 or 2-to-1 reward to risk. It's about big reward to risk trades. So sometimes it goes to 4-to-1, 5-to-1, and sometimes more. Now, the strategy goes over 3 steps. And if you master these 3 steps, then you master the setup. And it's all about catching the 15-minute liquidity sweeps or the fake out pattern using the 1-minute chart. So it's using 2 time frames, 15-minute and 1 minute. And we're going to be focusing mostly on a fake out pattern where price, it looks like it's breaking out above a high or below a low, but then it comes back to the range. And that's what we're going to be focusing on. So the first step is marking 15-minute highs and lows, and we're going to be covering high probability levels later. So make sure to stick until the end of the video, where we're going to be going over, highs and lows that we can focus on in order to get higher probability and eventually higher win rate. So let's say this is the present moment here, and this is the current time. You want to look for highs and lows. So I can see that we have a low here, we have a high, and we have a high, and this is the 15-minute time frame. So you're going to be marking this high, and this low. The highs and lows that price did not reach yet. So not this one because price already broke above it. Not this one, not this one, but this one because this one is not touched, as well as this and this. Before we continue, I've taken everything I've learned over the past 7 years and put it into one place. It's cool. Inside, you will get the full blueprint to finally make it in trading, including the exact strategy I use every day, the edge model. These are some of the trades I've taken with my members. You are welcome to join if you are ready to make the real change in your trading. Let's continue. And then what you're going to be doing on step 2 is waiting for price to close below the high or above the low. Now, below the high means here I'm looking for high. Okay, I want price to take the high but close below. And then above the low is the example we have here. Now, when we have this closing below the high or above the low, this is your wick projection, and this is a major step in the strategy. So you need to understand closing above and closing below. Closing above, or in this case, when we have this low, if we close below, this is not a valid setup. We need to see this candle here, this 15-minute candle closing above. It closes here. Now this is the closing price. It needs to be above, and this is our wick here. Now when we have this, there's gonna be the next step, but we could have another trade here. So if price goes above and then never close above this high, or maybe closing above and come into this other high, and then never closing above, we could have another opportunity to sell. Now for step 3, very simple. We're going to be watching the next 15-minute candle open. Remember that candle that closes, that was the closing price. Now we're going to be looking for the next candle to open. So after the 15-minute is done, there is a new 15-minute candle. And then based on that, we're going to be switching to the 1-minute time frame. And the 1-minute time frame is going to decide everything. So you either get an entry or maybe there is no entry. So it's not a confirmed that when we have the 50-minute closure with a wick, that we're going to be having an entry, not really, but the 1 minute is going to decide that. And you can enter this, so after the closing of the candle, you actually have different type of entries. However, for this video, I'll show you the sniper entry that I developed after 7 years of trading. And again, no one is going to teach you this. So what we're going to be doing now is going to the chart and go over the step 1, 2, and 3 in details, because I'll be needing the chart in order to show you how to take the entry. Now, taking a look at the 50-minute time frame of your dollar, we can see that we do have some, for example, here we have a 50-minute high where price did not close above. So you see this high here, swing point, where we have bullish candle and then bearish candle and then continuing lower as well. So 3 candles, and then price takes the high here and never closed above. And then we have a follow through to the downside. Now we do have, as another example, we do have this one. So price did not take the high. Now we have this one also. So price did not close below, actually close above. And then we have price going to the upside as well as here. Now, one thing I want to mention here is that it's better to look for price taking the high in the same direction, or the color of the candle needs to be in the same direction. That means as price is going up and taking the high, you want the candle to be on the same side. So here we're taking a high, this candle is bullish. That's what I want to see. I don't want to see something like this where we have here sweep, but the candle here is already closing bullish when I'm taking the low. This is already a rejection to the upside, and we're not going to be having a valid entry here. So probably it looks like, you know, price already went up without letting us enter. So what I want to see is a candle closing still on the same direction and without a strong rejection. The stronger the rejection it is, it's a bit harder for us to enter. So as an example, this one, this is a very strong and big rejection. It's going to give us lower reward to risk, and the entry is not going to be too valid here. Now, let's look at some examples here. So as an example, I can see that we have this low, and I'm going to show you at the end of the video how to focus on high probability ones. And I'm going to be going over some high probability. For example, this one is a high probability level. Now, somehow here it did not take it. Okay, but this is still considered a liquidity sweep. And why? Because price going to this level here, it's probably same as taking and going above the high. The liquidity is already taken, or at least people who are having stop losses here are already out because of spread. So even this one can be considered as a liquidity sweep. So we can clearly see that this is a sweep. So price did not close below as of now. It's closing above, and we have a rejection candle. Now, you also want to align everything that you learn on this strategy. The more confluences and the more experience you put in this, the more you're going to master the strategy and the higher the win rate is going to be, because we do have multiple highs and lows. How do you focus on valid ones? That's a skill that you need to master, and I'm going to give you some hints and insights at the end of the video. So now we can see that we did not close below, and here's the entry. The entry is going to be, first of all, based on the entry, the first step that you're going to be doing is marking this closing price of the candle. This closing price of the candle is the opening of the next candle. So next candle is going to open here and then do whatever, either go down, go up. It does not matter here. You know, depending on what happened, we're going to be looking for entry. Now we're going to be switching to 1 minute time frame, and the entry is going to be price could open here and then start going lower and then goes up. Okay. Another scenario is price opening lower, even taking the low, but I want to see no displacement below and then going higher and then going above this line. The main rule is the moment we close above this on the 1 minute time frame, that's our entry. So a closure above this line, that's your entry, because there is a flip here. Price is going to go to the upside. Now again, price could go all the way down and then close above. It needs to be within the same 15-minute candle. Okay, so let's notice what happened. Opening price, okay, and then we close above immediately. In this case, I'll be looking to enter here with a stop loss. Now we have different stop losses. A stop loss could be below the 1 minute time frame candle that actually broke above, or at least the swing low, which I would be putting here. Another one that is more safe is below the 15-minute candle. So one entry is here, and you could also wait for a retracement around the opening price level or part of this candle here. So a bit of a retracement, but you know, the safer one is entering here. And for this one, we're going to be having just a bit below the 1 minute candle. And then you're playing the price action. Now for the target, what you can do is look for the next 50-minute swing point. So you want to switch to 50-minute time frame here, and then looking for where do we have a valid high to be taken. And if you notice, we do have a lot of highs. This high is London high, so probably I'll be looking for price to come here, but we also have New York high. So you could be looking for this next 15-minute or this one here. So this is the nearest 15-minute swing point, and you could target this one. So putting the target as at the 15-minute high, entry here and entry here. So, you know, different entries or different stop losses, playing price action. Price goes up, no drawdown at all, and then going. Okay, so now we come back to this entry here. Now some people would be out at break even, some people would not be, depending on the rules that you have for break even. So price takes that high, so your first target is the next 15-minute level, and I'm sure that price, so we have a rejection here, and then after that price goes above a retracement and then going higher. Now if we consider this one here, I would consider this still as a liquidity sweep. Probably other brokers might have this as a liquidity sweep. Okay, but why is this high probability level? Because it is London high. Now you see this one, considering this as, or you know, we're going to be looking for one that is valid, because this one, some people would say it is a liquidity sweep, some people would say it's not. So we're going to focus on a valid one instead. So another good example that I just saw here, and we do have a lot of examples, but I want to, you know, teach you this in a very simple way, and then you have the choice to either, you know, pick any of the levels you want. Now for this one, I'll be looking for this low to be taken. It's not taken. Okay, now you want to focus on highs and lows that actually created something, and not just inside of a range, because inside of a range, this is a high, you'll be taking this one, it's just gonna go lower like this, there is another low. You want to focus on, you know, highs and lows that are part of the structure. And I can see here that as price was going up, we have, you know, this is also another opportunity. Okay, but then on London we have this high where price actually did not, and if you notice, this is a strong move to the downside, up, sweeping high, or you know, a fake breakout structure or fake breakout, and then we have price going lower. What are you gonna do here? Since this candle closed already, you'll be marking the opening price here, and remember that you have few minutes here, so you should always do this quickly. Switch to the 1 minute time frame, and that's the level that whenever we close below, it means that we're going to be continuing to the lower side. And before that, what do we have? The next 15-minute level, it's this one and this one. So I'll be marking probably this level here, and I'll be targeting this one. Now you want to maybe at 50% of the range, go break even or take some partials depending on how good your entry here. So now on the 1 minute time frame, what I'm going to be looking for is a candle to close below here, and then, you know, break below the opening price of the next 15-minute candle. Now playing the price action, we can notice, okay, so we close below here. There's one thing here to note of, is that I would like to see a strong candle closing below. So if we just talk about something that is mechanical, yes, closing below would give you an entry like this. Okay, and then there is a lot of, yeah, we could be having the stop loss above the 15-minute high. Okay, but in this case, I would actually prefer, if we close bearish for the next candle, I'll be entering, you know, with more confidence. But for now, this is a very weak closure. So okay, so price goes up. Now if we close below, okay, so it continues to the upside, and then rejection of the opening price. Okay, and here we have a closure below. So this is the candle that closes below. This should be your entry here, and then stop loss in this case would go above the 15-minute, and what we can target is the next 15-minute. That's your first target here. Okay, now for this one, another, because price filled the whole range here, this candle here that closed below, another entry is here. If you wanted to take a stop loss that is a bit tighter, it's gonna be maybe around this level. Okay, and then entering, or you know, targeting the same level. So price staying here, somehow respecting this, and then immediately going lower and then taking the level. And you can see this everywhere. So if you notice here, especially with a trend, no closure below, price going up, and here, no closure. I would consider this as a liquidity sweep as well, no closure, and then continuing higher. So it's not clear what we're doing here inside of a range. I would actually avoid this. It's much better to just avoid. So also here, so if you notice, this is Asia low, and this is what we're going to be covering on the next slide. So here you see no displacement below. Maybe there was a closure above, but it's not strong. And if you can notice here, a lot of, I would say, confusion. We still did not close below this, and then we have another sweep that is also part of it. So you can take this one and have an entry here if you were not able to enter there. Okay, so we have a new opening price here or closing price, and then you take the entry based on this. Now, how do you focus on high probability highs and lows? You want to focus on high probability highs and lows for one reason, which is focusing more on quality other than quantity. Quality matters more than quantity, and that's what builds consistency and gives you a higher win rate. So you want to focus on the quality ones by focusing on the valid highs and lows. Some of my favorite highs and lows are inside imbalances for valid gaps. So as an example, we have a high that is filling part of the imbalance. An example here is we have strong move to the downside, imbalance, price filled part of it, and then this becomes a valid one. So if we have the setup happening here, it's valid. So inside imbalances, now even in the other direction, imbalance here, fill part of it, go up, fill, and then never close below. We can look for longs here, structural highs and lows, and in other words, I would say the market structure or the breakout structure highs and lows. So think about where a breakout structure could happen, or where you're looking for the market structure pattern, which is, for example, here. If price failed to close above, then you can look for short there. So it's the market structure trap. Okay, and even here, looking for breakout structure, never closed up below, and then you look for longs. So yeah, structural highs and lows, and then the session highs and lows. Now I do have a video that is focusing on this one, a strategy focusing on this one, but that's could be considered as one entry of that trading strategy. So I'll be suggesting that and putting the link in the description. So make sure to watch this one, sessions highs and lows from 20 to midnight, that is Asia, and then from 2 to 5, that is London, and from 7 to 10, that is New York. So if, for example, New York takes the, so this is London, New York comes and takes the high of London, never close above, you can look for shorts here, and that is a high probability one. So these are my favorite ones. I would say if you want to master the setup, it's about focusing on quality other than quantity, because using every trading strategy, you can have a lot of opportunities. The professional trader, or the one that wants to succeed in trading, is going to be focusing on few ones and is going to refine the setup to focus on less trades in order to have a higher win rate. That is the way to success. So that's the end of the video. If you like the video, then make sure to share with your friends, leave a comment, a like, and then any question you have. Make sure to check It's Cool, my community, and if you want to trade with me, and check my mentorship. That's it, and I'll see you in the next one.